What's going on, guys? My name is D. Anthony with Evolution Traders. In this video, we're going to go over the price action on the NQ. I'm going to kind of show you guys a few setups that I know myself, along with some of the members in Evolution Traders, took this morning. I'm going to kind of go over the markups on my chart. So I want you guys to get very, very comfortable, being able to start with a blank chart. And as price action starts to develop during the day, you can obviously add in supply and demand zones, do your own markings, this, that, and the other. Now, I'm a big fan of using moving averages. The 20 SMA, the 50, the 200, those are all great. The linear regression, those are all great. But the real way to learn true price action is to kind of sit, mark up your own charts, and then use the moving averages as confluences, right? You want to see, do your supply and demand zones match with other things on the chart? Even the VWAP, the 5, the 10-day moving average. All of these things are all going to play a big part in the price, and it's all going to play a big part in supply and demand. So what I have marked out, the dotted lines, is going to be the first hour range. Okay, so that first hour after the market opens is what I have. Now, I live in California, so everything's going to open for me, and I'm going to talk in California time. It's just easier for me, right? So just correlate it to whatever time zone you're in. Market opens at 6:30, so that 6 a.m. time zone to 7 a.m., that's my first hour candle, and I'm actually going to show it to you on the hourly time frame. So what I'll typically do here is I'm going to mark out the highs and I'm going to mark out the lows, okay? So once we have this range, then from there, I'm going to look left of the chart and see if we do confirm the opening range highs, right? Do we have room to kind of stretch, okay? So notice the first hour highs is here. So if we confirm these first hour highs, does it have room to kind of run up to the upside? Okay, so typically what I would like to see is, if we do have a little bit of a breakout, I'd like to see a new high be put in, and then I'd like to see some sort of pullback. Once I get that pullback, I'm starting to get excited, right? Because what I want to see is, I want to see buyers step in off the pullback, trap some of these shorts, and then I want to see us push higher. And it's when we break out over that new high price above the first hour range is when I typically like to go long. The same thing for the short side. And I'm going to use the 5-minute time frame to do that. So when we look at the 5-minute time frame, okay, we obviously never confirmed that opening range to the high side. So that range was sitting at 17,968. However, you can see here that we do in fact break through the first hour lows, okay? So once we break through these first hour lows, what I'm then looking for is a confirmation candle. So if this is the breakout candle through the first hour lows, what I'm then looking for is a following candle to confirm the lows, okay? So once that happens, I'm then going to take my short position. Now, my stop loss is obviously going to be either a previous 5-minute candle close. Let me make these arrows a little bit smaller. It's going to be a previous 5-minute candle close, so it will be somewhere here, or we can use a close back over the 20 SMA, which is going to be here. So when we do start to take these trades, always map out your risk, right? So you want to map out your risk in number of contracts traded. So for example, if this range here, right, this breakdown, once we take this trade, if the prior 5-minute candle range is 30 points and you're going to give up 30 points, do the math as follows. For every 1 micro contract traded on this particular trade, you're giving up 30 points. So you're giving up $60 a contract. So if you trade 2 contracts, it's 120, so forth and so forth. Just do the math, and that's how you're going to map out your position sizing. Now, once we started to confirm those opening range lows, what I call the first hour, once we started to really confirm that, we came all the way down and we had this big washout before the next bounce. So what I'm also looking at in this period of time frame is that once we do put in this first low and we get that first initial bounce, right? Like a legitimate bounce where we put in a low where we kind of wash out and then we get back over the 5-day moving average, which is your power trend moving average. Once we get back over that, if we confirm the 20, then I would definitely be looking for a long. So what I would be looking to see have happen is once we put in this bounce, I like to see a close over the 20 and then some kind of back test and then boom, confirmation, and that's when you're going to go long. If that does not happen, then the downtrend is still intact. And as you can see, we had a downtrend all the way, until after lunchtime, right? So when you're looking at this price action, your next short position is going to be a break of the new low. So once this new low gets broken, example here, right? And actually, let me show it to you guys a little bit clearer. Once the new low gets taken out, then what you are looking for is you are looking for a new candle, right? To take out the new low, which happens here. So once this happens, this is your new short position. Again, remember your stop loss can be A, a prior 5-minute candle close, or B, any close back over this 20-day moving average. I hope you're following along. I know there's a lot of things going on here, but this is the type of stuff that you need to do to be successful and at least more consistent in the market. Understand your position sizing. Understand that we're not just chasing, right? We're not chasing, because I want to give you an example here. There's a lot of traders out there who chase this candle, okay? They chase this candle, right? As soon as we break down, guess what happens? Maybe they're playing smaller size. They take this position short. Next thing you know, we start to bounce, okay? And then we continue to bounce. And then we continue to bounce. And what happens here is they sell at a high point only to see the market sell off later. So when you start to see these type of things happening, you are getting caught in the trap. So always, 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 if this is the level that you're looking for, right? You want to see this low get broken. Great. That's entirely a good thing. Wait for confirmation. Let it break. However, this new low right here needs to get confirmed, right? And what does that mean? That needs to get confirmed. So when you have your level and you put in the new low, it needs to get confirmed by a following candle. So there's still more waiting to be done because we bounced up here and then we came back down and then we bounced up here. And then finally, once we broke that new low, that's your short position. And again, the same rules apply. You're using a prior 5-minute candle high as your stop or any close over the 20 SMA. And you just continue to ride this down. Makes sense. Now, we did get a little bit of a bounce. I marked out the low of day here. Once we kind of put that in. If you notice this 5 SMA, it's a power trending line. Each time that we closed over it, we really never confirmed, right? So there's a close here, but we never confirmed. There's a close here back over the 5 SMA, but we never confirmed. We tested it here, but we never confirmed. Again, confirmation means that once we close over it, we need to see a significant break and hold, a significant break and hold, a significant break and hold. None of that happened. So this is just simply back testing, back testing, back testing. But once you get where you get this close over the power trending SMA, and then you finally get a candle to confirm the high price over the 5 SMA, this is starting to tell you that maybe there's a short-term change in trend. Now your stop loss, again, previous 5-minute candle stop, or depending on your position sizing, low of day. Makes sense? Again, here's a 20 SMA play set up here. Again, stop loss is going to be below that 1 bar. And then you're going to just continue to either A, use a previous 5-minute candle as a stop, or low of day as a stop, depending on your risk. And then you're just going to sit there and ride this trade back up. Now, a good way to kind of sit and wonder where should you be riding this long trade back up to is this supply zone. Okay, so how I came up with this supply zone, which is this red box that you see on the screen. If I actually go back to an hourly chart, I'm going to show you. I'm going to go back to this hourly chart, and I'm going to simply make this a little bit wider. Notice the drop. Notice the drop from earlier this week. Once we put in that low, we kind of just hung out. We hung out. We hung out. We hung out. Today we broke through. So guess what happens when old demand, right? Old support gets broken, it becomes new resistance. Okay. So as you can see, when we did bounce, we bounced back up into old support, which is now new resistance. And then we continue to push back down. Okay. So now we're creating a little bit more of a floor here. If we do put in a new low, what you would then look for is any type of bounce. And if any type of bounce gets rejected at this new low, then I would look for a continuation back down. However, if we do put in a new low and we bounce and then back test and put in a higher low, what are you looking for? You're going to use this new higher low as a stop, and you're going to look to play this back into supply. Okay, and same rules apply. If we break through this supply, you're looking for a back test back into the zone, and then you're going to mark out that zone, use that zone as a stop loss, use it as a max pain, and look to break back up to the upside. Again, there's a lot of probabilities and there's a lot of things that can happen. But what you need to do is be mindful, okay? So be mindful, have these scenarios played out. But just going back to the 5-minute time frame setup, you can see we also did have this massive swing high, right? This swing high that we got put in here did get confirmed here, but again, was very, very short-lived. It is an active 20 play. You would have gotten stopped out because it came all the way back down. But again, you know, trading this late into the day, an hour with before the market closes, is definitely not recommended. Again, you know, you can trade it, and people do, and you can make money. However, it's just a rule of mine. It's been a rule for mine. I tell myself this: anything that I like after lunch, I'm gonna love tomorrow. So I'll look for the long tomorrow if we want to continue a little bit of a dead cat bounce. If not, I'll look for the short through the lows here. But again, you know, typically what I'm looking to do as a trader, right? What I'm looking to do as a trader is this time frame. Whoops. Is this time frame I'm looking to trade, okay? How do I get this off of my screen? So what I'm looking to trade is from the market open, okay? Market open is going to be here, into this lunch hour. So this time frame is what I'm realistically looking to trade. If I can't catch something in this time frame, whether it be short, long, short, you know, I really don't want to mess around with the end of the day. It's just never worth it. Again, your mind can only concentrate for so long, and the longer you sit here staring at these charts, it becomes more difficult to stay focused. Hope you guys found something useful out of this video. Maybe you guys can implement it in your trading style. But again, first hour lows, first hour highs always get marked out. 20 SMA on my screen. The only reason why I'm carrying this 5 SMA on my screen today is because the market was power trending. So I wanted to see, when did the power trend break? The power trend broke here at 10 a.m. Pacific Standard Time, and then it confirmed at 10:05. That was the break in power trend. So short-term power trend was now over. Maybe potentially we have a dead cat bounce, which we did. Is it the best opportunity? No. But I mean, again, was there areas of opportunity to make money on this run up here? Sure. And then if anyone was still sitting long, you obviously caught this candle here, which was an 82-point range candle. But again, with that being said, we did get rejected into this prior supply, which was these lows that was put in here. So again, you know, you have to always be mindful of what else is going on in the chart. Just because this setup looks good long, like we're coming back, doesn't necessarily mean that we're going to take out high of day. Just because we're selling off all day doesn't necessarily mean you can just jump in on any candlestick. You know, some people jump in on this new short here and then they get trapped on the way up, right? I'll give you an example. You take 10 mini contracts short here, and then it starts to do this bounce. Your emotions are flying. This is not a big move at all, but your emotions are flying on 10 contracts. And guess what? 9 out of 10 people are going to sell at the top, and it's going to continue to sell down, and you're going to kick yourself in the ass. And all it's going to make you do is start to revenge trade. So with that being said, stay patient, size accordingly. I know it sounds good to make $10, $15, $20,000 in a day, $1,000 in a day, $500 in a day. I know it sounds good, but you have to trade size that you can handle. Okay. And for most traders out there, I would say that's between 2 and 5 micro contracts. I think that amount of risk you can stomach, that amount of risk you can make decent profits and allow days to compound and stack and build your account. I'll see all of you guys on the next video. And if you guys are interested in signing up with any prop firms that I trade with, I use Top Step, I use Apex. I do all of my charting on Thinkorswim. This was a question asked yesterday. I do not trade futures on Thinkorswim. I'm an options trader. I've been trading options full time for close to 10 years now. It's been 9.5. I chart on Thinkorswim. I've got multiple monitors. I've got multiple setups going on here. All I do is execute my trades in NinjaTrader for Apex and on TraderVate and TopStep X for TopStep. So those are on a side monitor. So if I'm looking at this chart and I want to execute a trade, I simply drag my cursor over to the next screen and I click buy and I click sell. It's as simple as that. All of my charting is done on Thinkorswim. I hope that clarifies some things for some people out there. Until next time, I'll see everyone on the next video.